Hello, Kathy Scansos for the Finance News Network. Joining me from Altech Chemicals is Managing Director Iggy Tan. Iggy, welcome back.
Thank you, Kathy.
Altech Chemicals is developing a High Purity Alumina Project in Malaysia. Can you start with a quick recap of the project?
Yeah, Altech is an Australian company. We're listed on the ASX and the Frankfurt Exchange, and our project is to build a 4,500 tonnes per annum of high purity alumina. Now, high purity alumina is a feedstock to make sapphire. And sapphire is used as the building blocks of the LED industry. So you can imagine the growth in the LED industry. Well, we're bringing on a project that is going to be supplying the extensive growth in the LED as well as in the lithium battery sector, because high purity alumina is also used as a fire retardant in lithium batteries, and that's a very fast growing sector as well.
Now to the high purity alumina plant in Malaysia in more detail. You've just secured funding for the project. What are the terms and who provided the funding?
At the end of last year, we successfully concluded the debt funding part of the project. So we secured $190 million from a bank called KfW IPEX Bank, which is a German bank. And out of the 190 million, 170 million is actually export credit finance out of Germany and the German government. Now, with export credit finance, it allows the bank KfW to give us very attractive terms and long tenure for the loan. Now that we have secured the debt, we are now embarking on the project equity component of the project. The project capital cost is around 298 US, and the balance of the project equity will be achieved in the next 6 months. So we've given ourselves to the end of June to secure that. Obviously, we're looking at different options to minimize dilution to the shareholders, and some of those options is additional mezzanine debt that can be subordinate to the KfW loan, and also looking at possible joint venture partners coming at the project level, also to minimize the dilution at for our shareholders.
And Iggy, what are the key financial metrics for the project?
The project is a very attractive project. The net present value is nearly $500 million US. The payback at its full rate is less than 4 years, and the project at its full rate generates something like 76 million US a year net cash. So it's a high value, high margin project. The gross margin is around 65%. The operating cost is about $10,000 a tonne, and in our financial models for the debt funding, we assume a very conservative price of $27,000 US a tonne. That basically is used for the debt structuring, but the current price is actually $40,000 US a tonne, and if you plug that into the financial model, the net present value goes up to about 1.1 billion US, and it generates something like 133 million per annum at EBITDA at its full rate. So as you can see, it's a very high value, high margin project, and it's a very exciting project.
To the project timeline, you have appointed a German contractor, SMS Group. What are the key milestones, and when do you expect the project to be completed?
They're a very large engineering company. They turn over about 3 billion euros a year. And part of this EPC contractor, what's unusual is that they will provide a fixed price turnkey contract. They will also provide completion guarantees, so if the project is delayed, there will be liquidated damages. Also, they will provide a throughput guarantee, so if the plant doesn't do the 4,500 tonnes per annum, they will fix it. And then finally, they will also give a process and quality guarantee, so that if the product that's supposed to make high purity grade, 99.99%, doesn't achieve it, then they will fix the plan to make that happen. We have something like 15% of the total CapEx value in performance bonds. And so this is a very exciting contract for us because it shifts a lot of the risk to the EPC contractor. The next steps, as you know, we've already secured the offtake with Mitsubishi. They will buy all our products for the next 10 years. And Mitsubishi have, as you know, is a major house in Japan. A lot of these chemicals that go into Japanese companies have to go through trading houses, and Mitsubishi have customers in either Japan, Korea, Taiwan, and China, either in the LED space or in the lithium battery space. So for us, that contract with Mitsubishi is vital to this project. So in the next 6 months, we're looking to raise the project equity component. Once that is done, hopefully by the end of June this year, we look to clearing the land both at Meckering and in Johor. The construction period is around 2 years, including commissioning, so we expect to have the first product out by the end of 2020 or early 2021. So very exciting development, and we're now focused really on the project equity side.
Last question, Iggy. What can shareholders look out for in terms of news flow over the next couple of months?
Well, there's always extensive news flow as we tick a lot of the boxes. They may be from permitting to manufacturing license to the approval of the equity and so on. So there's a lot of things that are happening in the next 6 to 12 months, and we continue to tick the box and advance the project.
Iggy Tan, thanks for the update and congratulations on the financing.
Thank you, Kathy.